So Steve, we just were reading that housing seems to be still be in a depression. The Case-Shiller numbers weren't very encouraging, but yet we've got some pending home sales that look really good. Uh, what's going on? How to read the housing market?
Well, the number we saw this morning was the Case-Shiller index of home prices from December. So it's a backward-looking number. It doesn't tell us anything that happened so far this year, but it did hit a new fresh low for the past few years. Housing went through an insane bubble where prices got crazy and up to 2006, and then they absolutely collapsed. The other indicators, like you mentioned, pending home sales are better, existing home sales are better. On the pending front, it's contracts that were signed for home sales. Good signs. Consumer confidence today was at its best level since early last year. These are all good things for the housing market. It doesn't mean that prices are going to come back in a hurry. So even if we've reached the bottom in prices, and it looks like we may be around that, they're going to bump along that level for some time to come.
I think Warren Buffett recently said in his shareholder letter that he was dead wrong on housing last year. He's got some big interests in the housing market. You know, how should we read that? Is there still more trouble ahead, or are we at a bottom?
Well, Mr. Buffett might have been a little hard on himself. He was wrong in terms of the timing of it. He might be more early than wrong. He said last year that he thought a housing recovery would happen within a year, perhaps a little bit beyond a year. Well, it's a year later and housing hasn't really moved, but there's better signs than there were a year ago. And the fact is, he still maintained his investments in housing. Berkshire Hathaway owns a number of businesses tied to the housing market, none more so than Clayton Homes, which actually builds houses. He's maintained those investments. He hasn't sold any of the businesses. He still buys into that theory. And the point he makes, which is a good one, is that we're still forming households. And at some point, the supply-demand equation is going to flip where we need more supply.
If an investor wanted to do some nibbling in the housing area, because we do see some signs of life, what should he be looking at?
The home builder trade has happened. People got into them late in 2011 and they rallied pretty sharply. We recently had earnings. Toll Brothers reported a loss and the CEO there said conditions are healthier but still not ideal for selling homes. That's going to be more of a trade, I would think, rather than an investment where you're going to put money into it and it'll just grow. Two interesting companies that reported recently are the home improvement retailers, Home Depot and Lowe's. Both of them beat earnings expectations and the stocks have picked up a little steam recently. That's more of a derivative play where you don't necessarily need a huge jump in home sales. You can have people modifying their homes. You can have people doing home improvement projects where those kinds of stocks could do well.
Wait and see attitude, I guess.